Alright, MegaWhale team, welcome back. We have a really interesting video today. We're going to be talking about the Bitcoin bottom. Is the bottom in? Where can the price go? And what price do we need to actually clear for us to be macro bullish? Because there's a difference between short-term bullishness and macro bullish trends. Let's dive right in. So first and foremost, guys, starting on the log chart, and we can see a few things. I've annotated this chart for you guys just so you can follow along a little bit easier. We have our different cycles. So we have our 2014 cycle, our 2015-16 bear market, our 2017-18 bull market, our 18-19-20 bear market, and then onto our 21 bull market, and now into our bear market. We can see that we have these blow-off tops, and these blow-off tops are indicated by these gray boxes. And we've had 3 blow-off tops, and this was a small blow-off top, but nonetheless it was a blow-off top. We then had a rejection, so we came down, we lost this trend line, we came back up, and we rejected from that trend line. From that rejection, we came down and retested the dotted line, and even coming down to this lower support line. We saw this happen in the 2014 top. We saw it happen in the 2018, where we came down and retested a dotted trend line, and now we're seeing it again over here. We came down, retesting up to the dotted trend line, and back down that dotted trend line. So we're seeing a very common pattern here, guys, and the pattern is that, in fact, according to the data, according to our macro structures, we have actually reached a first bottom, and I've gone ahead and circled it over here. We can see bottom number 1 dotted line, and this dotted line has acted as a very strong support throughout the entirety of Bitcoin. If you scroll further back over here, you can see even before we had this initial rally in 2013, we had a lot of support around that level. And I do want to point out, we do have our second bottom, which is in fact this solid line, which I've circled again, which is our solid line bottom number 2. And bottom number 2 is an absolute low, and we've retested it a few times. The first time, of course, was down here in 2015, and obviously cryptocurrency wasn't very large back then. Not a lot of people talked about it, and we only wicked down to it. If you notice, we only wicked down to it for 2 wicks over here, 2 wicks. And then finally, our 2020 COVID crash, we came down and wicked down to it. So out of the entirety of Bitcoin's chart, we have 3 wicks down to this trend line and never breaking below it. What does that tell us? Well, in comparison to the amount of wicks that we have and candles that we have on the dotted trend line to the amount of candle and wicks we have to the solid trend line, we know that there's a greater probability that the bottom will be in at the dotted trend line than at the solid trend line. And yes, Bitcoin did exactly what we said. It rejected from where we told you to reject. It went into a bear market. We broke into the Gaussian channel, and into a little bit of a consolidation period, ascending channel. Like we said, we came down, we retested 24,000, and we bounced upwards. And guess what? We bounced on that dotted trend line. So guys, I think, I'm not going to go out and go on a limb over here, but I think there's a good chance the bottom could be in for Bitcoin. But I do want to talk a little bit more about this in a moment, because there are different factors this time around. We have the current global economic situation, and obviously our technical indicators are suggesting otherwise. But according to our market structure, according to this chart, we have at least reached the first bottom. This is a very strong bounce point. And you can see if we lose this dotted trend line, our next target is this solid trend line, which is sitting around $17,000 to $18,000. Okay, so that's our first chart, guys. We're going to go ahead and get into our normal Bitcoin chart. And I want to go ahead and show you this one. Again, I've annotated it. Let me know down in the comments below if you like the annotations on the chart. If it helps you visualize what we're looking at a little bit more and helps you follow along a little bit better. If that is a fact, if that is true, I will be sure to make little notes on the chart so you guys can keep track of what's happening in real time. So this is our Bitcoin chart, and we usually use this chart over here, but we've kind of updated it and we've gone to this chart over here now, which is our new updated chart that we'll be using going forward. Of course, we do have our macro structures in here. We have that ascending channel over here. We can go ahead and just quickly pop that one in. There's our ascending channel, but we don't need that at the moment. So what we can see is two declining descending channels. We have descending channel number 1, which has our 2 solid black trend lines, and we see the price kind of bounce around between those trend lines. And then we have descending channel number 2, which is represented by these 2 dotted trend lines. So we've got this overlapping descending channel right now. And what we've noticed is as the time goes along, as the price goes along, we have this divergence between that bottom gap and our top gap. Now, what does this actually mean? Well, it can show us some pretty interesting things. So first and foremost, we can see that this is actually a huge demand zone. So this bottom gap is now actually a huge demand zone, and this top gap is a huge supply zone, meaning that we're expecting a push upwards into this range for a retest of this range and hopefully take some profit in there. But what I would like to say first and foremost, guys, is if we lose this uptrending black line, and this is represented on our large time frame chart, which is this one here, as that dollar trend line, that $30,000 level, we can see a possible retrace back to $24,000 if 30K can't hold. All right, moving on from there. If we can hold 32K and push above this red line here, and this red line just extends a little bit across, we will see a push upwards to the next resistance around 36 to 37,000. All right, that is this red line over here. In fact, that range is more of a little range, so we're going to go ahead and edit that now. We do have a little bit more of a range on that chart around 36 to 37. We'll go ahead and put that in. So into that range. From that range, we can either experience a major rejection and push downwards and then capitulate again, go back into a bear trend. Very possible, and that will end us at the bottom around July, which is our prediction, that July prediction. Or if we push past this resistance range, we can see the price actually climb higher. So this major rejection zone here is something to keep an eye on, and we do have that $32,000 trigger. And at the moment, we're kind of holding support. We do need to see a push above 32,000. If we see a push over 32,000, we can expect Bitcoin to climb higher. Okay, so what would we actually need to see to be short-term and macro bullish? So we talked a little bit about the short-term over there. We talked about how 32K is that major resistance. We break 32K, we should push higher into this resistance range over here. And you'll be looking at taking profit anywhere between 34 to 37, ideally between 36 to 37K. If we break over 37K, we can expect the price to climb higher. But what would the price actually need to do to be macro bullish? And there's a big difference, and I really want you to focus on this next section, which is there's a huge difference between macro bullish, so a bull market, and then an uptrend. All right, there's a big difference between a bull market and an uptrend, just as there's a big difference between a bear market and a downtrend. And a lot of people who are newer to this space mix the two up. A lot of people on crypto Twitter mix the two up. There's a huge difference. For us being a macro uptrend, we need to be flipping our slow moving average. So our slow moving average is our 200 moving average. All right. For example, on the daily chart, for us to be in a macro uptrend, we need to be clearing the 200 moving average on the daily, as well as obviously the 100 moving average. But more importantly, we need to clear a macro structure. The macro structure is this high here. So we need the price to be pushing upwards past $48,000 and find that support for us to officially be in a macro uptrend. Macro uptrend, bull market, simple as that. Now we can definitely see a short-term uptrend. Anything like this is obviously not going to shoot up. Anything between where we are now and here is not a bull market. All that is an uptrend, a strong uptrend. We can definitely see something like that. So, like I've said many times, what would need to happen? $32,000. We've got this red line over here. Break that line. We can see a push up to 36, which is here to 37. Perfect. If we push higher, we'll need to clear the 100-day moving average. We'll need to clear this resistance zone, making a nice high over here, pushing up. Major resistances are over here. Major resistances over 100-day moving average is going to come down over here, and we're going to have to push up past this range here. A lot of resistance above us is possible, but keep in mind there's a lot of resistance. As soon as we clear 48, guys, we basically have no resistance. We have very little resistance from 48. At 48K upwards, we are officially in a bull market territory. We can go pretty high after that. So going back to this chart, you can see we have that 48K level in over here. On this chart, if we break out past 37, 38K, we would have broken out of this declining trend line, this downwards sloping resistance, and that could give us the momentum to push upwards to 47 and blast through all of those resistance zones that we have just shown you. Okay, so we're just going to go ahead and introduce the Bitget exchange really quickly. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. So I wanted to talk about Bitcoin dominance next. I wanted to talk about the DXY and the total cryptocurrency market cap and talk about how this supports a bullish case scenario. And of course, we've talked a lot about the bearish case scenario. We already know what's going to happen. We already know how to prepare. If we lose 30K and we can't start closing daily candles below 30K, we can expect 24. Simple as that. But according to our macro structure, guys, we need to expect, all right, and it's super important we understand this. Even if you are bearish now and you expect lower prices, you have to be aware that we are at a major long-term support on the Bitcoin chart. All right, and therefore you have to be aware of the potential upside moves so you can capitalize on it. And that is the scope of today's video. So I don't want people coming into comments and saying, "Oh, Mega, weren't you bearish yesterday?" I'm never bearish. I'm never bullish. I've never been bearish. I've never been bullish. I only have price targets. I don't care where they are. I have price targets based on the data. The data, technical-wise, is suggesting bearish. And the reason the technicals are suggesting overwhelmingly bearish right now is because technical indicators are lagging. Technical indicators are very good at predicting the strength and momentum of trends. They're pretty bad though when it comes to predicting local tops, particularly on a macro time frame, because our larger time frame indicators, all right, they're incredibly smooth, which means they're lagging, which means if you're going off indicators alone, this is a common mistake. If you're going off indicators alone to predict a bottom or top, you are going to be late. All right. How do you think I predicted the top over here in the blow off top? How do you think I predicted the top over here? How do you think I predicted the bottom? All right. I didn't use indicators. I used market macro structures. I used Fibonacci ratios. I used measured moves. That is exactly how we predicted 24K. We did exactly that. We're using a market structure here. We have our Gaussian channel in here because I love the Gaussian channel for macro trends as well, but we're not really going to talk about the technicals today. So I just wanted to make that clear. Market structure is suggesting we're flipping. It's suggesting we're finding major support. Therefore, we have to understand price moves between support resistances. When it hits support, we expect to bounce unless it breaks through. We haven't broken through and closed yet below it, so we have to assume a bounce. Moving on, guys. So Bitcoin, let's go Bitcoin dominance. And Bitcoin dominance has slightly dropped. And what Bitcoin dominance is, it shows you a measure between the total cryptocurrency market cap and the amount of money that is in Bitcoin in comparison to the total cryptocurrency market cap. Currently, 44.59% of money is in Bitcoin comparative to the total crypto market cap. And the lower this percentage goes, the more money that flows into other coins. So you see altcoins starting to rally. And this is one piece of evidence here that we see when we see altcoins potentially seeing a bounce or a little rally, is that Bitcoin dominance starts to drop. We're starting to see that. That could indicate that we're seeing a little bit of a move upwards. So let's move on to the DXY, and the DXY is probably the main thing I want to show you guys today, because this is something that we've been talking about for a long time. And what is printed on this DXY candle right here is really interesting. And this is called a spinning top. So this red candle here is what we call a spinning top. Now, what does that mean? Well, it means that after a strong move upwards or downwards, we can see spinning tops, but in this case, we saw a strong move upwards. We've reached the point of trend exhaustion, which means that the bulls, in this case, we're not talking about bulls or bears, it's not really showing that, but we're going to go ahead and talk about it in that regard. The bulls are losing strength in compared to the bears. That suggests a price flip or a trend reversal is incoming. Same over here, guys. Remember, we talked a lot about what happens when a DXY drops. Money flows out of cash into assets. Assets rise. When the money flows back into cash and out of assets, the DXY rises. So now when we expect this to drop, we can see markets see relief bounce. If we push past this resistance range over here, markets will continue to bleed. What this candle tells us is that we're seeing a potential trend reversal. And you can't really say how low this is going to go because interest rates are rising pretty soon again in June. But we already know that maybe we might see a little bit of a rally over here between now and June. And then when the interest rates kick back in June, we see the markets bleed again until July and finally bottoming out. So that is what I think is going to happen. And that's why if we go back to this chart over here, we can see that we see some sort of rally until June when interest rates get pumped again. And then we see the market bleed down and bottom out in July. That is what I think could happen. That is what I'm leaning towards. That goes in accordance to our technical indicators, that holds validity. And if we go ahead and look at our macro structures, that again holds a bit of merit and kind of stays true to this support line and the data we can gather from here. So it's kind of a happy medium. But I do want to say, guys, you're going to see a lot of mixed opinions right now. The market is very much on the fence. There's absolutely no doubt about it. The reason being, macro structure analysis tells us we are flipping, we are potentially finding a bottom and bouncing, where technicals are lagging and telling us the bottom is not yet in. So the best thing you can do right now is eliminate your personal bias. Your personal bias should be directed with the data. If the data is unsure or on the fence, so should you be. It is simple as that, all right? What is overwhelming with the data right now is that we are reaching a macro support, therefore we need to expect a possible bounce. That is simple as that. We have our trigger lines. If the trigger breaks, we expect the trend to continue until proven otherwise. It is simple as that, guys. You go with the trend until proven otherwise. So I just wanted to take a quick moment to talk about our VIP channel. If you're interested in joining VIP, go ahead and contact us on Telegram. You can see our VIP channel over here. We do a variety of market updates, trade signals, and a whole lot more. You have direct message access to me, so you can ask me any questions you want, whenever you want. And here is our results for our last month. You can see 95% win rate so far, 571% profit, all our winning trades so far this month, and our one singular loss. If you're interested, go ahead to the channel, click Contact MegaWhale for more information. Alright guys, just want to wrap up the video with introducing the Become a Trader course. If you're interested in joining up and learning how to become a trader, we're going to go through the fundamental concepts or technical analysis, bearish and bullish market patterns. We're going to teach you how to identify candlesticks, how to use all this stuff, and to wrap it up, we're going to teach you some profitable mindsets, market psychology, advanced risk management, and how to actually find trades yourself. If you're interested to learn how to market, how to analyze exactly like we do on this channel, using the same strategies and the same tools, go ahead and contact me at cryptoacademycourses@gmail.com. We have 50 hours of content with 450 slides, 85 videos, and a whole range of different worksheets and tools to help you guys become better traders and to teach you how to analyze the markets and trade just like I do. Thanks guys, we'll see you in the next video.